Welcome back, YouTube. So in today's video, I'm going to be going over what are the chances that the Fed are going to step in and save the stock market, save the crypto market, and literally backtrack this coming Wednesday. This coming Wednesday is the Fed meeting. That's the 16th, and they're going to be pretty much coming out with their point system, the rate hike, possibly giving us a hint at the remainder of the rate hikes for the rest of the year. Remember, we have 7 more meetings this year, including the one this week, and it's been hinted that they're going to do a 1/4%. I do not believe that 1/4% is going to be sufficient when it comes to getting the inflation under control, but we're going to see if they're going to stick to their guns. We thought initially that they were going to come up with something a little bit soft just because of the international affairs that are going on, and they didn't want that many negative catalysts pulling against the market. We got the CPI numbers last week, and just as we suspected, they are up for the 4th month in a row. We are seeing inflation that we haven't seen in like the last 50 years, and they're going to do a 1/4%. We know that the CPI numbers for next month are going to be absolutely horrible because the CPI numbers that we just got last week, they do not include the numbers that we have been seeing as far as for the inflation and gas prices. This was before Russia invaded Ukraine. So we know for a fact that the numbers next week or next month, inflation is going to be even higher, possibly even 10%. At least according to the Fed, we know that it's actually in double digits already, but at least next month they'll probably be willing to admit it. So the question is, when we look at the catalyst that's going on, the runaway inflation, the Russia-Ukraine situation that has not been resolved yet, what is the likelihood that we're going to see the Fed do a U-turn? If you're thinking the Fed doesn't care about the market or our portfolios, then you are absolutely correct. They primarily care about market participation and inflation and having these two under control. But we did see something like this in 2018, where the Fed pretty much backtracked. If you look at like the Nasdaq, the S&P 500, you'll see that dip when they were threatening to raise rates and stuff like that. And they pretty much did a U-turn because the market panicked, freaked out. We had that dip, and then after they said, "Oh, okay, well, pretty much never mind," the market resumed. And again, what we've seen here with the panic in the market and the money leaving the stock market, the money leaving the crypto market, nothing has happened yet. This is all, I guess you could say, it's being priced in. This is the fear of what's going on here. We have not had the rate hike yet, and the Russia-Ukraine situation has not been resolved yet. We have no idea the full effect of this, and also there's no more QE this month as well. Up until this month, well, up until last year, we were getting roughly around $120 billion a month via bonds and mortgage-backed securities. And starting in January, they were cutting it by 30 billion per month. And this month, supposedly, they're going to cut it out completely. So pretty much, we're going to be on our own from here on out. So Wednesday is a really, really crucial day to determine pretty much what kind of year we're going to have, especially going into Q2. The immediate effect is definitely going to be Q2. I imagine, just based off of these numbers and the CPI numbers and stuff like that, that April is going to be more of the same. But we still have a few issues that need to be resolved before we can actually get a concrete idea of what's going on in the market. Overall, Nasdaq hitting a 21% correction, hinting at a bear market. Everything, most of the signals here are now pointing toward a recession, how bad of a recession, and if the Fed is going to do anything. Now, more than likely, because of the amount of inflation, and we see that the administration we have now, they're saying that this is simply because of supply chain issues and it has nothing to do with government spending. That's, I'll let you guys work that out as far as what you believe. But this leaves the administration, if they truly believe that, this leaves room for them to want to possibly um, continue with more stimulus as far as for the economy. Now, eventually, of course, if you're thinking this can't go on forever, yes, you're correct. Eventually, at that point, if we continue to stimulate the economy continuously forever, or at least for a long period of time, yes, we will eventually have runaway inflation, and there's no amount of rate hikes that would be able to get it under control. Eventually, we're going to have to see what the market looks like without all of this, what I call funny money being injected. And there's a lot of funny money in the market right now that pretty much needs to be absorbed. So as far as for crypto and the stocks and stuff like that, this is what's causing a lot of the panic that we're seeing here, because the institutional money, which obviously we know makes up the majority of crypto and the stock market, they're going to want to find the bottom, and they pretty much are going to switch from game mode to, okay, let me hedge and protect what I already have mode, so that they're covering their bases and not pretty much trying to time the market and stuff like that, what retail does. So they'll pretty much say, okay, well, since let's just go ahead and rebalance our portfolios here and wait for this thing to bottom out, then we'll make our reentries. So be careful out here when you're buying the dip, because this is like what we may see over the next few months is definitely a prime opportunity for the dip to keep dipping. In my opinion, I believe that the rate hike that they currently have will most likely not be enough, and they're going to have to come back and pretty much taking a more aggressive approach. And at that point, I believe we will see, I guess you can call it like the Fed's rug pulling the market. There's a lot of names for it, but at that point, I think we have the potential to see massive panic in the market, more than what we've seen so far. As of right now, I guess they're trying to like mediate it. We're seeing some pretty much some defaults on loans by banks. We're seeing some margin calls. We're seeing the liquidity issues kind of creep their way up. So as of right now, we are, I guess, kind of like walking on the edge here for like the next few months. But I do not believe that 1/4% is going to be sufficient. So if you're waiting to re-enter the market, or if you're thinking, hey, what should I be doing right now? In my opinion, what I'm doing is believe it should be just getting cash heavy and preparing to make some great entries on positions you want to go long on. We're going to have to check in with the Fed on when, see what direction this is going to go. This can go either direction. They can make a U-turn, or they can just stick to their guns here and kind of play it by ear going into Q2. We'll see going forward, but it's in my opinion that I believe that 1/4% is not going to be sufficient. So that being said, stay strong, everyone. We have some exciting times coming ahead. I know it may not seem like it just because things are going red, but trust me, this is when wealth is built. If you found value in this video, hit the like button, subscribe to the channel, and certainly share it with a friend. And also check out the links in the description. I have links by Webull, Moomoo. You can get free stocks up to thousands of dollars, really, just by depositing any amount. So even if you don't like the stocks that you normally get, I would just get those stocks and simply sell them and buy something that you're actually interested in, or transfer them to your main brokerage account. And also check out BlockFi. I have a link for in the description section for them as well. And you can get up to $250 in Bitcoin or Ethereum if you open a new account with them. I appreciate all of you. Thank you. And until next time.